Smaller stocks have been outperforming their large cap peers in 2021, and we're going to get to the bottom of the reason why. Plus, watch out, Bitcoin bulls, because Ethereum bulls are coming for you. And finally, there's been very few places for bears to make money with inverse performing ETFs thus far this year. But I dug up one inverse ETF that's up 56% so far this year. I'm going to give you the ticker symbol and much more, so stick with me. I'm DeLegge with ETF Guide TV. A warm welcome to all. If you're here for the first time, be sure to hit that subscribe button. Also, post your comments in the comment section below. Let me know how you've been enjoying the show. Hit that like button. Now, my series ETF Battles, and it's weekly, has in a very short time become the default program for all ETF investors and traders to watch. And if you haven't seen it, well, then you have to watch this program and subscribe on ETF Guide TV. That way you don't miss it. Become a regular viewer and enjoy the grab bag of awesomeness that I produce on this channel. Now, I want to share with you, and this will be the place that we start. I want to share with you a note that I got from a viewer by the name of Elon Muskrat. And this was earlier this year. What a great YouTube username. I should have grabbed this one. We all should have grabbed this one. Anyway, Muskrat is complaining about the volatility in TLT. Now, this particular ETF tracks long-term U.S. Treasuries, and they have not performed well over the past year, and mainly because of the fact that interest rates have been trending higher, and that hits long-term bonds the hardest, and that's why we see TLT massively underperforming on a relative basis compared to the total U.S. bond market ETF. That's ticker symbol BND. Nevertheless, let's get some context because I always like to give it to you. Keep in mind that long-term U.S. Treasuries have still performed pretty decently and actually quite well during stock market crashes. I remember that 2008 meltdown. They jumped over 30% in value. So they still have a pretty good track record in terms of safety during market meltdowns or moments of crisis. So keep that in mind, Muskrat. And don't be a stranger. Post your thoughts and let us know how you've been enjoying our program. So let's take a look at the Greed and Fear Index. We'll begin here. I like to remind all of our viewers that stock market prices are shaped by one thing that's the most important factor of all, and that's public psychology. And if public psychology is happy and fearless, well, guess what? Stock prices are going to be up. But if public psychology becomes fearful or negative for any reason, well, guess what happens to market prices? They fall. And so right now, as you can see, we're narrowly in the greedy territory, but we're really closer to neutral levels than extreme. So no real news here in terms of the Greed and Fear Index. Greed and Fear Index, no real extremes in terms of greed or fear to speak of. Now let's take a look at the smaller stocks because this has been a real story thus far in 2021 with the mid caps and small caps outperforming relative to large caps. We've got the chart here of MDY, which tracks the S&P Mid Cap 400, and then IJR, which tracks the mid cap. Actually, that's the IJR is the small cap 600 versus the S&P 500 ETF SPY, and you'll see that the mid caps and small caps have been outperforming their large cap peers quite significantly thus far in 2021. Now let's take a look at those leverage ETFs that track the same three areas, large, mid, and small caps. And you'll notice the same performance trend for the 3X leveraged ETFs. MIDU and TNA are both outperforming SPXL. Now, the latter tracks the S&P 500 with 300% daily leverage, while TNA and MIDU do the same exact thing, but again, they're targeting small and mid-cap stocks, and as you can see, the trend has been your friend if you've been bullish on those smaller stocks, and that continues to unfold here in 2021. Let's take a look at Bitcoin, which has gotten most of the headlines this year, but let's not forget that it's Ethereum that's been outperforming. This chart shows you the 78% year-to-date gain in ETHE, that's the Ethereum Trust, and I included also BitW, which tracks a diversified basket of 10 large cap cryptocurrencies BitW is an excellent barometer of the crypto market and something I would consider as a core crypto product to own because of the fact that you get Bitcoin, you get Ethereum, plus you get some other cryptos in that particular trust, and it's just a good basket that that hedges you against not knowing which of these cryptos is going to perform the best from this point forward. So you kind of own them all in BitW. And then we got GLD, which tracks the price of gold bullion, which has been a significant laggard relative to these digital currencies. Next chart takes a look at commodities, which have been strong performers in 2021, fueled by that rebound in energy commodities like crude oil. And as global economies and travel begins to trickle back to normalcy, I expect the commodity prices to continue firming up. And the rise in commodities has also been a sign of higher inflation. USCI tracks a basket of 14 to 17 different commodities, and it's a great core commodities ETF. If you're looking for core exposure in your portfolio, of course, this would fit into your the context of your core portfolio. Core exposure to commodities, USCI does an excellent job of that. And if you're into commodities, and it is a major and core asset class, check out the second quarter commodities ETF guide that I just produced and released. It's available to all for free. Get your copy at etfguide.com. Hit the guides navigation bar at the very top and get that second quarter commodities ETF guide sent to your inbox. Let's take a look at this short trade. The only bearish trade, well, I shouldn't say only, but one of the few bearish trades that have really worked out. This is the short long-term U.S. Treasuries trade, which has delivered a delicious 56% gain. That's TMV. And you'll notice TMV targets U.S. Treasuries. This is long-term U.S. Treasuries with 20-plus year durations. And it aims for triple or 300% daily opposite exposure to long-term Treasuries. And that's been the right trade if you've been a bear. So TMV continues to deliver some pretty good performance. It's come off its yearly highs. It was up as much as 75% earlier this year. But nevertheless, the message is clear. Pick your spots carefully, bears, because there haven't been many places to make money shorting stuff in 2021. Here's a quick look at U.S. home prices, which have been hot, hot, hot. And we see the top 10 markets. Really, the Sun Belt and the Southwest has been dominating. But other places like Seattle and Boston and Tampa have delivered pretty strong year-over-year results. Remember, the three most important things in real estate are location, location, and location. All S&P 500 industry sectors are up since the start of the year. That signifies broad participation in the stock market rally by all sectors. That's exactly what you want to see if you're a bull. It also provides a strong base for, in terms of breadth and health of the overall stock market rally. Now, this is a good chart from our friend Todd Rosenbluth, one of our ETF Battles judges. He posted this on Twitter, and we are now entering into May. And we've all heard the expression, well, sell in May and go away. Well, this chart gives you a historical look at how stocks have performed from May to October versus November to April. So all the haters who tell you to sell your stocks in May and go away, well, here's more context from a historical perspective. You see the S&P 500, it's still been up from May to October 65% of the time, with an average 1.6% gain. And you see the Russell Small Cap 2000 has also been up 55% of the time with an average 1% gain. In other words, stocks have been up more often than not. In fact, half the time, more than half the time from May to October, which is pretty darn good, even though it lags the November to April period. International emerging market stocks, by comparison, have tended to lag from May to October, but the declines that they've experienced have been pretty modest. So, key takeaways from today's program. Well, sentiment towards stocks is greedy, but not overly greedy. It's more closer to neutral territory. Nevertheless, it's important to be careful. Bitcoin and Ethereum are still very bullish. They're Bitcoin right now is in the process of consolidating. Ethereum is in a serious uptrend, and it's begun to outperform its larger rival. We see mid-cap and small-cap stocks performing very strongly, in fact, outperforming their large-cap peers. Risk appetite in the stock market is rising. We've got all 11 S&P 500 industry sectors in positive territory year to date. That's a healthy sign of broad participation by all sectors. And then, of course, my public service announcement, right? I always do this. I always remind our audience about the importance of having and only investing at all times with an adequate cushion, or what I call a margin of safety. And this is what I teach you on this channel. I also teach it in my online classes. And I encourage all of our viewers to use the margin of safety worksheet that I created to help you calculate how much of your investments you should be earmarking for safety. And you can get your worksheet, by just going to etfguide.com. You can hit the books link at the very top. That's the navigation bar. And you'll see an investor toolkit that you can download. It's an ebook, and in there you'll get that margin of safety worksheet. You can also get it by enrolling in my online class, which is titled Build, Grow, and Protect Your Money, a step-by-step guide. I've got links to all of these things provided in the description section below, so you can check that out. And then one final reminder, if you'd like to get an even deeper analysis and insight into your investment portfolio's taxes, fees, and performance, well, you can get in touch with me at portfolioreportcard.com. I will analyze and grade your investment portfolio. One final reminder before I end today's program and sign off. This week's ETF battles will be a triple header between 3 South Korea ETFs. And in case you didn't get the memo, South Korean stocks have been hot, hot, hot. That's the #1 performing global stock market internationally. And Wesley, Wes, this is the one for you. You've been asking me for this particular ETF battle. It's going to be a triple header, so do not miss it right here on ETF Guide TV. Well, thanks again for watching. Be sure to subscribe, hit that comment section below, and hit the like button if you've been enjoying our content. I'm Ron DeLegge. We'll catch you next time. Be safe.